Um, hope you all had a great, awesome, wonderful holiday break. Um, we are still technically in the. Oh, excuse me. Trying to get this headset entangled here. We are still in the holiday trading season, which means that next week is not really our full trading week of the year. Um, we should still expect to see some muted volume, but as the week gets longer and the days get farther away, normal trading activity should increase here. All right. Um, what do we have to look at? If this is your first time with us, welcome. If you've been with me and the rest of us for the last few weeks, we've had a kind of a dull trading time period over the last, give or take, 2 weeks, week and a half. Again, the movement over the holidays, especially over Christmas into New Year's, is not sometimes the most honest price movement, but sometimes it is, and it is a precursor to how the entire year is going to go. But before I get into our individual instruments, I want to kind of go over one more time my style of analysis, what I like to do, how I like to look at the markets, and that is using Gann's theory of the market. His style of analysis was based on time and patterns and behavior of psychological levels. It's really not anything different or new that you hear from modern renditions of his work, but that is still how I look at it from a classical technical analysis point of view, which is an odd thing to say for a style of trading that has really only been around for, you know, 40 years, 30 years, and really only put into practice by a great many traders over the last, well, since the 80s maybe. So it is still a really new field. But anyways, getting into this new year, when we're talking about Gann's style and how he approached the markets, he has specific dates that are extremely, extremely important. And just because I want to make sure that I get the dates correct, when we get into market seasonality, we need to look at January 2nd to January 7th. Okay, those are going to be a lot of the lows and highs in those periods. And then the next dates after that are actually, sorry, just January 2nd to the 7th. Whatever the price is at those dates, that is going to be very close to, in his style and his look, as the high and the low for the year. So, for instance, if we're looking at gold here and it's at 1,313 and 77. If, let's say, price closed at this between now and the 7th and get any higher than that, then we can consider price. If it is trading below that, we can consider after the 7th that is the high of the year. All right, and then until that's broken, that is a significant area of resistance. All right, same with as we get further on. So just remember that the really important dates are the 2nd to the 7th of January. Those are very, very, very important. All right. Now, saying that, as we get into looking at stuff, let's look at gold here. Now, gold has been a trade that we were looking at over the last couple of weeks that has been kind of a dull mover. It's just been in one direction. It has been respecting this Gann angle. But we have broken through this angle, and we are, we actually broke through. If we go back to 2017, go back to the daily, and we go to where we opened in 2017, January. So, is there some truth to Gann stuff on this? So we opened around 1,153. All right, that really coincided with the Trump rally, they call it. As the stock market got really powerful, gold kind of fell down a lot, which is normal. Not, gold is used to hedge against risk, and everybody was risk on last year, and there's nothing to say that won't happen again. So the low of our year that never really got broken was 1158. Now looking at this year, our high of last year was in September. That's very, very common. And we are at we'll just say 1,358. We struggled for much of the year in gold to get to 1,300 and stay above it. And the only way we got there and have gotten to where we are now is by getting into the holiday period. And we moved in one direction. And remember, I've been talking about this ever since the week of Christmas and before Christmas, that holiday trading periods are generally the worst times to trade, and no holiday period is worse to trade than Christmas and New Year's. You just have decreased participants. You have a lot of people on break. If anybody's any institutional algorithms are on, they are generally going to just have a one-directional bias. And as I was saying, that whatever direction price is going a little bit before Christmas break, that is the direction it's probably going to go the whole time. And gold did that. Gold has been just having a one-directional move. It is still going there. We could anticipate this week that it continues to do that until next week. We don't really see a big difference here. This is the one-day chart. We are really overbought on the one-day chart. All right, we are up in price on decreased volume, below average volume, way below average volume. In fact, we haven't been trading above average or average volume since the 13th of December. Okay, actually, yeah, the 13th of December. And that day was the only one, because before that was the only day of normal and above average volume, because before that, on the 6th of December, is when we started trading below volume. So every day for about a month, except for one day, we were trading on below the average volume, which is never a healthy sign for the movement of anything. If the old adage, volume precedes price, is correct, then price should move down here. Now, looking at this on shorter time frames, bring it down to the 8-hour chart. We are really overbought. These are great sell signals for me. I'm looking at my two oscillators. The RSI is up at 90.95 on the 8-hour chart. We have to go back a long ways to see something close to that. In fact, I don't know if we have ever been in recent, and I'm going all the way back here. What do we got right there? Nope, not even that high. This is all the way back to November of 2016, going further back on our 8-hour. What do we got there? 83. I mean, we're in those high areas, but those high areas have always been large declines. Yeah, when I was kind of taking a peek at this yesterday evening and then this morning, I had to go back about 5 years before I saw something this high in an RSI on gold. This is a great signal that we are really in no man's land territory here, that this is not a natural movement. However, this is the beginning of a new year. And sometimes these oscillators, which are based on past movement, sometimes we have to negate this. All right, sometimes it's best to just sit aside and see, is this an honest move? And the only way that we're going to know that is by determining where price is at when it comes up to a future area of support and resistance. So right now, I am wanting to get short at 1316.22. All right. I am wanting to go short there because this is a very steep increase. Also, this is a natural harmonic in the price of this instrument. This is a natural area of resistance. We have had totally uninterrupted buying that we should expect some profit taking up here just by people wanting to scale out their positions, wanting to take profit, not wanting to participate any higher. And if I'm wanting to get long again, which I am, I am wanting to, hopefully I can get short up here at a confluence of this angle. Bring it back down to the hourly. Zoom it in here. And if I look at my Bollingers, we'll see how much we're kind of in no man's territory just on the hourly. Because we've been trading in this. This is what I've been saying this, that just because a level approaches and is trading in an overbought territory on the RSI or even in high levels on the composite index, doesn't mean price has to go down. Things can remain overbought and oversold for a long time, not just on the hourly, but on the daily as well. Very, very rare for that to happen on weekly and monthly charts. Very rare. But if you look at this, we have just been trading in this zone, and we've been using the 65, the 70 to 60 levels on the RSI as kind of supportive zones for buying. Now, if we take a peek at the Bollingers getting hit, there are a lot of people, including myself, who will say that if the move is up like this, just continue to buy the dip. But I'm more of a long-term, I have a longer-term outlook, and I have to play the probabilities. That's how trading is done. It's, you don't gamble. If you're thinking that you missed the boat, I think I missed the boat then. I mean, if you think you missed the boat on a move, you probably did. All right. The only reason you know you didn't miss a boat if you made the difficult choice to enter at a time before the move was done, and then you realize you're in the move. But right now, I don't have when I'm looking at the past few hours of movement here, of price movement, when I'm seeing these high volume bars that indicate a lot of selling in that time period, then to me, that is a sign of distribution at these levels. All right, so I am looking to go short. I have it written up here on the corner. Those are my short, and then I'm looking to go long on a pullback and cover that short. All right, that's my thing for gold. And we are going to get to cryptocurrencies today too. So, but this might be a little longer than a half hour because we'll have a lot to go through at the beginning of the year. Look at the euro. If we look at the euro and gold, it's the same chart. It is the same chart and structure. The daily, we are just, if it's indicative of institutional activity. So this is quite normal. How these prices get driven up on such low volume is because you have a lot of retail traders like myself who were short participants lower. I was one of them. I was short at 18.3 and I held my short for quite a while. I have a large stop tolerance, and I was eventually stopped out. And we see that we are getting to these levels here that are very similar to gold. Just like I said with gold, we got to pay attention to how these levels work out. If we look at last year's high, all right, last year's high was $1.2093. We did not get that high yet. We got to $1.2081. That's within the same value area. All right, that is within the same value area. Now, sorry, let me bring this down to the hourly. This angle, this darker line, this was a trend that we were in back on November, and then it got broken and started trading sideways, and it is looking like it wants to retest this. Generally, when that happens, when you find a retest of this after a longer period of time, a false break of this line would have been price breaking through for a day or two and then responding back up and move. But because this has been kind of a longer drawn out move, I am not confident that we want to test things higher. But if we do test higher, if we do touch and burst above the high, I have a really strong long bias on the euro dollar. In fact, because the dollar is showing so much weakness right now, that a long above 121 is not out of the cards. At 121. But watch movement. Generally, if we get above the 120 85, 120, 90, and we get into 121, then it's always hard to tell what happens after that because we have not traded in that zone for quite a long time, and I mean over a period of years. But if we look at our chart, what is most likely to happen as we touch those levels? It'll move up more. Price likes to move in the path of least resistance, and the higher we go, the less trading participation we've had at higher prices, and so the less resistance we have higher. It's going to be harder for price to want to come down because we've had a lot of supportive buying. But if you see this is a P-shaped profile, volume profile. Volume profiles, they come in different shapes. There's B-shaped, there's P-shaped, there's other shapes, but a P-shaped profile is not a healthy profile. This generally means that price will want to return to some type of mean somewhere. All right, and then that's on the daily that we're looking at this. So we just want to be very, very careful of participating long, because I'm short right now. I re-entered a short with a tighter stop. I've got a 50 pip stop over here, sorry, 150 pip stop. I'm looking at the probabilities again, and the probabilities are we were in a squeeze. We have broken out of the squeeze in the Bollinger Bands, but we are way overbought. On really any time frame, that is not a healthy move. That's considered a false breakout. People who trade Bollinger squeezes without oscillators and look at this are like, okay, well, this is a good opportunity to go long. I am not a believer in that camp. Again, I have to trade the probabilities, not just the price movement. I have to trade the probabilities, and when I use my trading style and my style of Gann's analysis, I forgot to put the other horizontal time frame here, but this is a zone that is getting to be a sell zone. So I'm short, right now. All right. we'll have to see how this goes. If we look at the dollar index, that is experiencing some weakness here, quite a bit of weakness ever since the beginning of December. We've had some pretty big weakness in the dollar because we are even approaching. We broke the lows of November. We broke the lows of go farther back. We have not gotten to the lows back in September of 2017. All right. This could be considered to be a supportive area. From now and lower, it should be considered supportive area. But a break below this, if this breaks last year's low, that's generally a good indication of it going lower. But for right now, we are in very oversold conditions on the hourly, and we've been touching the Bollingers. There's a lot of argument for a higher price. Again, we are trading in oversold areas though, so we have to look at some longer time frames to see what's happening. The 8-hour, same story. Same story. But we are getting divergence. That's a very obvious head and shoulders going on right now. And so that movement towards 91 even is not a bad indication. I don't trade the DXY index mainly because the powers that be in Washington D.C. They do know more about how I can best spend my money safely than I don't know. I'm being sarcastic when I say that our overlords in Mordor on the Potomac know what's best with my money. For all of the vaunted free markets that we have in the United States, the regular citizens are heavily restricted from participating in a lot of the world's markets that everybody else can participate in. It's a kind of form of professional protectionism we have going on over here. There's my rant. But if you're a trader, if you don't share that sentiment, I don't know why you're trading then, unless you work for a really, really powerful, large capitalized institution. And if you're listening to me, then you must not be doing very well at your job. Okay, now I'm going to check out the dollar-yen pair. Again, the dollar-yen and the euro, they do like to move together, or not together, they like to move opposite of one another. Back during the week before Christmas, we saw that the euro and the yen were moving together that whole week. They all moved up from this area. All right, so looking at, let me clean this up. We've got a lot of these trend lines, but this, it re-entered this trend line. We've had a lot of movement down. We're going to have to look for some supportive structure actually right where it's at, the 112.13. The next area for support that I'm wanting to go long, if it gets there, is 11.58. Uh, 111.58. But also, that's my ideal long, but I'm comfortable going along between, what are we at there? 112.28 and 1112.04. We'll just say that. So I'm long anywhere around here. Actually, the higher we go, I'm fine. I want to see a break of this angle, though. I really want to see a break of that angle. I want to see a return to this gray angle here, this gray Gann angle in our square of 144. I would like to see a return to that value area. But for right now, we've had this movement, and we'll have to see how people are feeling about the dollar as we get further into the year. Euro pound. This is about the move that has been playing out the most ever since we were talking. when I start, I think I drew this here on the 26th. Yeah, the day after Christmas. Yeah. I was saying that this is probably just going to bank around between these two Gann angles. Um, and the most important angle here on our screen is this one right here, the one that's kind of going from the corner to the top. That is the 45-degree angle. Uh, one of the Forex guys said, nice mic drop, Lord of the Rings mic drop. We have the banking around these angles is totally normal. So your trade here, my trade here is actually fairly simple from my standpoint, looking at the 8-hour chart, but I want to look at the hourly as well. Is that any return to the 45, I'm gonna buy. That asterisk means 45 degrees. We'll just say. All right, as long as the oscillators are not in overbought territory. Line. Oops, and make some room there. Okay. Those are the two pairs. You know, the other pairs are almost every other pair on the planet right now is experiencing a lot of the same moves right now. But between the gold trade, the euro, the dollar yen, and the euro pound pair, we're seeing similar structure. This is the pair that's responding the most to how it should in technical analysis, whereas the dollar yen, the euro dollar, and the gold dollar are the ones responding with the least amount of attention to technical analysis probabilities. Again, like when we were talking about gold, even right now, it has moved higher, and it's at the 13, 16, 22 area. We have a lot of other things happening around the globe, the fundamentals that are affecting this move as well. Notice also that we broke through this Gann angle pretty strongly. And if you've heard me talk about how these angles work in Gann analysis, he has something called the law of angles, that once an angle is broken, it will move to test the next one. And so this used to be resistance, although it did not get a lot of resistance. And this will turn into support. So where is the next angle at? Well, if we look in time, it's right here. And I would imagine that one is the, I don't think it is though. I gotta kind of take a peek here. No, it's not. Okay. But looking at the daily, when we are getting close to this intersection of this harmonic angle and this very steep Gann angle, when you're moving in price very, very rapidly, very, very fast, and how we determine how fast that is going is by how steep the angles are, because angles are a sign of momentum. That we have gotten ahead of ourselves in price and time, and so when we very well could break the 13, 16, 22 area, but I am expecting, just based on the probabilities, that we should face some natural resistance up here. If we don't, that is very bullish. If we don't, that is very bullish for gold, and we should expect it to want to break above the highs of last year. And we have to go back a ways to get to this kind of value area above 1358. So just be careful if you are short like me, if you have a short bias at these areas, because we should observe some profit taking here and some type of pullback to the angle or the 1295 area. All right. Tomorrow we'll look at more of the Forex pairs to see how they played out after the first day. Again, for Forex, we're going to go into cryptocurrencies right now. But again, for Forex, we are still in the doldrums of trading. We won't be out of it until Monday next week. All right, that is going to be the first full trade week that we have. All right. Now, cryptocurrencies. Bitcoin. Let me pull up my crypto chart here. I have gotten to be a huge fan of cryptocurrencies. They seem to move more naturally because they're so new. If you were with me at all last week or the week before, we were talking about cryptos. Been discussing Bitcoin a lot. Now, Bitcoin, let me just do a quick rehash for you. And I want to bring up, get rid of this time cycle here. If you've heard me talk about moon phases, the Gann's theory on moon phases was that when you have a full moon, that it should be at or near a market low. And that if you have a new moon, which means there's no moon in the sky, a new moon means no moon. That's the best way for me to remember it. If you have a new moon, that means that you are at or near a market high. And this is a psychological thing. I worked in mental health field for 12 years in an inpatient psychiatric facility. And I can tell you that moons do matter. On the times that usually the week or so before a full moon and the day of the full moon, we had more problems and more, and that's not just related to mental health, that's just everybody in general. It seems like as you approach a full moon, people are more edgy, they're more upset, and then every day you get away from it, from that cycle, things are a little bit more normal, and even there's a little bit of levity. How does that affect the market? Well, technical analysis is just a visual representation of the mood of the participants. All right? People don't buy things if they think it's going to go down, and people don't sell things if they think it's going to go up. All right? You buy things if you think it's going to be good. You sell things if you think it's going to be bad. Moon phases. What happened to Bitcoin? Let's look at a few of these moon phases. Let's go back to November. This is a full moon. This gray moon, full moon, moves up. All right? We're supposed to have a short bias at this market high. We didn't. That doesn't always work. But in a bull market for any instrument, you're always going to have muted selling to no selling at new moons, but you'll generally always have buying at full moons. And then we had a full moon. All right, then we go to the all-time highs. We reach these all-time highs in Bitcoin right on the beginning of a new moon. All right, that was the apex of people being happy and very bullish. The entire time from this low mood, everybody got super excited, which is magnified because of that moon cycle, according to Gann. And then we had this massive drop. Okay, we had a big old sell-off. In fact, if we say price was at 20,000, which it didn't get to, but it's in that from 20,000, we sold off all the way down to 10,400 or 10,000. So we had a 50% retracement, 45% to 50% retracement in Bitcoin. That's not uncommon. Bitcoin has lost 80% of its value 4 or 5 times in its entire history. So this is not an uncommon move for Bitcoin. Is it a bigger move money-wise? Oh, yeah. You lose like $9,500 to $10,000 worth of value. That's a big loss out of 20,000. Losing 50% of 1,000 is not as big a deal as 50% of 20,000. All right, but what happened? We had responsive buying. We're in the holiday season. We have random volume aberrations here, but what is happening right now. All right. This downtrend line has been broken. I actually put up an idea on TradingView, which is just I didn't do a lot of explaining. Oh, I want to go to ideas published. I did this last night or the day before, 14 hours ago. All I wrote was full moon, retrace higher and beyond, and retracement higher because of the full moon. That's all I put. I didn't do any other analysis. I just put that there for my own and others kind of to see what happens. Because the full moon happens January 1st. All right, the full moon happened yesterday. It is not yet painted on TradingView, and in fact, where I live in Central Time, I don't think the full moon shows up till my evening. But we are at or near a market low in Bitcoin. All right, we have been consolidating in this range, and we have broken above. We want to get above this angle. We really want to get above this 2x1 angle, and this arc, these arcs act as resistance and support. So expect to see some, continued banging around between 15,000 and the 13,331 area. But any move outside of this arc is going to be a pretty big mover. If I look at the daily chart here, we're in some very low ranges on the RSI for Bitcoin. Word about oscillators. Oscillators do not oscillate just between 70 and 30, all right? Not every instrument will treat the 70 as overbought and the 30 as oversold. You have to look at your instrument that you trade and look at the history on a daily chart of the RSI. Does it find support somewhere else? Does it find support at the 44 level? I'm looking at this on Bitcoin. I see buying there. I saw buying support over here. Let's go back a little further. Even lower, we have a lot of supportive buying at the, it's within the 40-50 range. Not every instrument is going to wait till it gets to 30 or below before it reverses. It will reverse sooner. In fact, in an uptrend, your RSI actual support level can be between 50 and 70. So when price gets down to those, that's you consider that to be like the oversold condition. But how does this move? How do I anticipate this moving? I don't think fundamentally Bitcoin as a cryptocurrency, it sucks. I mean, it's terrible. It was awesome when it first came out, but its scalability is bad. The transaction costs are huge. It's just not the most efficient cryptocurrency anymore. Now there's some fixes that they're coming out with. Who knows? But Bitcoin's also the only cryptocurrency that has a futures contract on the Chicago Board Options Exchange and the CME, Chicago Mercantile Exchange. So this has a futures contract. So in I trade futures. I don't trade Bitcoin futures yet. I want to see more people involved in it. But because this is now a legitimate instrument for investors and speculators now, because it's traded on a very regulated exchange, and the two largest derivatives markets in the world, we have some legitimacy to Bitcoin, and Bitcoin the Bitcoin futures contract could just represent not just Bitcoin, but the entire opinion or look of cryptocurrencies as a whole. It's entirely possible that Bitcoin stops being traded as a coin or as a currency and is instead viewed as the derivative of the cryptocurrency market as a whole. All right. because there are other coins out there that are going to be way more efficient, that already are way more efficient, and have the scalability solution solved, they say, and the transaction costs are quicker and faster. Um, so just be on the lookout for this. There are a crap ton of institutional and big money investors still interested in putting money into Bitcoin. And the fact that we've held these levels over the whole weekend without collapsing any further is a good sign. I am on board with all of the pundits that say this thing goes up to 20 and beyond. I don't see it going down beyond probably 8,000. But for right now, if I'm looking at the probabilities, our RSI and CMI levels, and the fact that we have broken out of that arc without a lot of resistance, and we're approaching the next one, and hopefully we can get above this line, I'm pretty bullish on this. If you want to wait, you can get any pullback below 13.6. All right, those are good areas to get in on a pullback, or actually, there. And we really want to see us return to above this zone. We want to get all the way up above this 2x1 line first. All right. Now, I consider there to be three major pairs. Just based, I use Bittrex as my exchange, and then I use Coinbase as my bigger wallet. It's also an exchange wallet, whatever Coinbase is. But Coinbase is probably the most important institution in cryptocurrencies as far as how it is viewed by outside other institutions. So there are three coins that are considered to be the majors. You have Bitcoin, Ethereum, and Litecoin. And without getting into the specifics, generally when Bitcoin's doing bad, those three will also move the same way. We have a little bit of a difference going on right now, because usually Bitcoin, whenever it moves higher, it is always in percentages higher than the other two. But we have something a little different going on right now, in that since last evening at around, I want to say, around 10 at night. No, even sooner. It was, around 8 o'clock. Litecoin and Ethereum started to move up pretty big. All right, we did not get a whole bunch of responsive selling off of this 45. In fact, we just stayed with this 45. This is Litecoin right now, and it's showing the moon. Again, I have this thing about Litecoin and the moon phase where it'll just go higher. And in fact, why don't I just publish that idea right now while I'm with you? Oh. And we'll just say that just keep it really simple and really untechnical, non-technical. Beyond technical analysis. And LTC USD. Okay, now taking a peek here. Where are we at market lows? Yep, we were at a resistance zone. We were overbought for a long time on the longer time frames. Litecoin has been moving up quite a bit. A long on Litecoin really is cryptocurrencies are not going to be like Forex, where you're going to have great re-entries to buy. If you see an entry, you might as well just take it, because you have to have a strong stomach for cryptocurrencies. You do, stronger stomach than you do for Forex. probably have to have a strong stomach for cryptocurrencies as you do for futures if you trade futures, because futures is that's a beast in itself. Forex is a lot more forgiving. It's a lot more smooth in a lot of ways. A lot of people might disagree with what I just said. In fact, I'm kind of disagreeing with what I just said as I think about it. But I mean, I think what the point I'm trying to make is that we will see a lot of differences in how these will operate, and cryptos are kind of like that. Now, what we look at here is this triangle, and the trend line here. If we go to the top, gotta get the magnet back on. The magnet is on. Okay, I'm gonna go like there. All right, so this is our resistance line we got to look out for. All right, we have a lot of resistance right in this area, but that we got above the 45 and now we're holding on the hourly, that's very bullish. You know, as we get to this arc and this angle, this trend line, we're gonna see some type of up and down and up and down. So we may see boom, 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 and I want us to get above this arc first. I want to see price get above there. I want to see it stay above the 45, and as it breaks out of the arc, hopefully we go boom all the way up to our next resistance arc, but maintaining in the 45. I think it's very bullish that the selling pressure off the 45 was not something that happened. I really like how this has moved. It has gone up 15%. Now the other coin, the second most important coin, is Ethereum, and sooner or later we're going to get other coins in here like Ripple. But if we look at Ethereum, look what it did. Full moon near market low, shot up into this, back into value. It wants to get above this 45. It wants to get out of that resistance arc. It wants to shoot up higher. That's just all sorts of funny to see that happen. It's not funny. I have seen this happen repeatedly over the years that I've been trading, but it never ceases to make me smile and giggle because it's just so cool to see, to forecast or have an idea of how price moves based on probabilities, which are based on the natural movement of markets, because markets are natural, they're not random. They are not random. All right, so these resistance arc turned into support, banging around in it, broke out of it, never really tested it, continued to move flat, and then boom, we just wanted to go right back into this value area. We could see maybe a little bit of shorts, selling off here, but you know, it's not a lot of participation in the selling right here. So, and this is really indicative. These volume bars were massive. We had a lot of people buying and wanting to get in up here. So be on the lookout for even higher prices, flattening out. This cycle is ending. This Gann square cycle is ending, so we need to be on the lookout for what happens next. There's two other coins that I look at a lot. ADA Cardano is the name of the coin. I have had more money made on a small investment on this coin than I've had in really very few things in my entire trading history. This coin is one of the only coins, and I mean, here you go. Here's some. I'm not giving you investment advice, but I like Cardano because it is a very efficient coin. It has the answer to scalability issues, the democratic voting system that applies to coins. It has solved that. So it's not like the big conglomerate Chinese miners can basically just through the tyranny of a majority tell everybody else what's going to happen in the future. this is their. I don't want to go into all the details, but they've kind of solved the scalability issue. They have the University of Edinburgh involved in this. They have the Japanese government involved in this. They're actually releasing some ATMs in Japan. This is big in a large way. It's still not out there yet. It is in the top 10 market cap for cryptocurrencies. Cardano's number 5. It used to be down in the top 20, but now it is the 5th. All right, it is above Litecoin. Just keep that in mind. Its market cap is above Litecoin. It's above IOTA. It's above Dash. It's above Nero. It's above Monero. It's still well below the big boys. Okay? And I will let you to look at this market cap. Bitcoin's dominance has really gone down a lot just because everything else is increasing in value. But Bitcoin represents 36% of the entire value of the cryptocurrency market. And the cryptocurrency market is getting higher and higher. We're going to see $1 trillion in valuation here soon. All right. But, we have Bitcoin, Ripple, Ethereum, Bitcoin Cash, and Cardano. It's definitely the most affordable individual coin right now at 77 cents and per coin, 77 US dollar cents per coin, and it's 5th in market cap. This has a lot going for it. The ex-CEO of Ethereum is actually in charge of Cardano, and I encourage you to check out their site. Do your own due diligence. The worst thing that you can do in cryptocurrencies is to take somebody's advice without investigating. Do not take my advice. Look it up yourself. Determine whether or not these coins are appropriate for you. But I'm just pointing out the things that I like to participate in. I love NXT. If you see this here, it went up quite a bit. It fell down. It's because there was they call it an airdrop. It was a coin Ignis, but the NXT service and platform is well beyond anything that anybody else has out there. It's but anyways, enough about cryptocurrencies. We're gonna look more at how these guys move, along with Forex is still going to be the majority of what we talk about. It's the majority of what I trade. It's the thing I love the most, but cryptocurrencies are certainly a thing that a lot of Forex traders like to participate in, and there's a lot of shared capital now where traders have shifted some of their Forex capital to have it participate in the cryptocurrency market. So people who trade Forex are speculators. People who trade Forex and futures. And cryptocurrencies are a speculative market. I don't think you'd find a lot of people who are investors on the long run that would consider cryptocurrencies yet an investment vehicle. There are some who do, but for right now, cryptocurrencies like Forex and futures, they are the instruments for speculative trading. All right, again, sorry, I got a little winded, almost double the normal length of time here. We're going to have a lot more educational videos coming out. I hope you guys found some value in today's presentation. I think we're going to have an awesome year in 2018. We're going to have a great time together. Make sure you let us know how we can serve you better, because this is a service. If you're a monthly subscriber, or if you're in the trial and you want to get into a monthly fee or a monthly subscription, I'm here to provide a service. I want to make sure that the information that you are getting is good, that it's going to help you in your trading, that it's something that you can add value to your trading. I want to totally avoid the crap type of trading and analysis and styles that are out there, and just go over with you what I use and how I became profitable. So again, Have a very excellent year. If you're still on vacation, enjoy the rest of it, and we will see you tomorrow morning at 7:30. Have a good day. Bye-bye.